Chainlink is one of those OG cryptocurrencies. It was one of the very first altcoins. It's a major player in decentralized finance still. It's an oracle. Now, what on earth is an oracle? First of all, oracle is a crypto category that's up the most in the last 24 hours. It's also a top performer in the last 7 days. This is not necessarily surprising because this market is dominated by Wall Street, not anymore by retail demand. The retail investor likes to gamble with meme coins. Wall Street likes to bet on the rather solid plays. Now, an oracle is a connection between the outside world and the blockchain ecosystem. Blockchains tend to be very isolated. They normally don't get external information. But if you're running a decentralized finance protocol and you want to know, for instance, what's the worth of a particular cryptocurrency, then you might want to get that information from many sources, aggregate the information, and then provide this to the decentralized finance protocol. That in the end, you know how much can I borrow, for example, versus the collateral. This is mainly what Chainlink is doing. Now, of course, over time, Chainlink has developed more and more products, more and more connections, for example, between the blockchain and traditional finance, making transfers happen between traditional bank accounts and the blockchain ecosystem. But all of those things are not the reason why the Link price is up. This rally here, the 37% increase in the last week, where we moved above $22, while at the same time Bitcoin barely moved. The rally is due to the following news, and that's the launch of a reserve buyback program. So Chainlink is going to buy back Link tokens. And of course, as the circulating supply of a token decreases over time, this should, in theory, increase the token valuation. Now, in general, I look at cryptocurrencies in relative performances. I always think in terms of opportunity costs. Does it make sense to buy Bitcoin or Ethereum or Solana or Chainlink? I always want to know what's the best bet, because while it makes sense to be somewhat diversified, I think diversification is better achieved across asset classes. So owning a bit of crypto, owning a bit of property, a bit of stocks, a bit of precious metals, owning 10 or 20 different altcoins doesn't make too much sense, because there's all this correlation. Things go up and down at the same time within a market. And so different assets within an asset class, so let's say the different altcoins, they all compete for the same part in the portfolio, right? We want to get the best 2, 3, 4 assets within crypto. And so I think it's a mistake to look at prices like this here. This is a Chainlink price in US dollars, and it's on a linear scale. And yes, this compares how well does Link do compared to just holding cash. But who wants to hold cash long term? Nobody. Cash should be a small allocation in a portfolio just for daily expenses or for potentially buying bottoms during very hard times, but it shouldn't be more than 10 or 20% usually. So a comparison to cash doesn't make sense, and it definitely doesn't make sense on a linear scale. A logarithmic scale is better because here we can see the percent changes over time. This here is 800%, this over here is 800% as well. So you can actually see the percentage changes. That's the constant on a logarithmic scale when we measure vertical distances. That's not the same for linear scales, right? Here we just have the dollar price changes, and while this here is 700%, this little bit of a difference. Over here, the same kind of difference is only 13%. So really, it doesn't help to look at linear scales. It's much better to swap this to logarithmic scales. But again, this is just a US dollar chart, and we always want to look at things relative to other things. What are actually our opportunity costs of buying Chainlink over other things? And so this is the most straightforward comparison. This is Chainlink relative to Bitcoin. And while initially Link outperformed BTC very much, that turned around in August of 2020, so 5 years ago. Since that peak to the price today, Link underperformed Bitcoin by 88%. The overall trend really isn't that great, despite the recent rally caused by the buyback program. Now, there is more correlation between the altcoins and Ethereum, so a better comparison is probably this year. Chainlink relative to ETH. And over here, interestingly enough, the bottoms do align quite nicely. They align a bit better compared to the Bitcoin chart, and they give us a certain trading range, and they tell us that currently we are neither very expensive nor very cheap on that trading range. By the way, those kind of lines on this chart, they're not just drawn today for this video. I've drawn them long time back, and it's not just retrospectively that we say this is low, this is high. I publish videos on Chainlink regularly. And at those times, right, feel free to check out the videos on this channel when we were close to those tops here. We were calling for a potential Chainlink top. And I will, again, once we go low here, so when Chainlink underperforms Ethereum by another 36%, I will make another video that is probably reasonable to allocate more towards Link again. So feel free to subscribe over here. I publish videos on Chainlink regularly. Now, there is a bit of an issue comparing the Chainlink price with the price of Bitcoin and Ethereum, because even though there is a lot of correlation, even though we do remove the macro environment a little bit by just looking at the relative variations, the problem is that both Bitcoin and Ethereum now have all of those inflows through the ETFs. So Wall Street is buying Bitcoin and Ethereum left and right. That's why they tend to outperform most altcoins. But how is Chainlink doing relative to the rest of the altcoin market? So let's say we have an altcoin portfolio. Let's say we want to buy 3, 4, 5 altcoins. How is Chainlink long-term stacking up against the rest of the altcoin market? That's described in this chart here. It's the Chainlink dominance. Again, it peaks in August of 2020, since then is going down, but we are stabilizing in the last 3 years. And we have been very low, and one could make the argument that there's potential more upside. Relative to the rest of the altcoin market, Chainlink doesn't look too bad. An increase of 50% is definitely reasonable. But let's have a look at what's driving the Chainlink price. Let's have a look at the on-chain metrics. Who's buying and who's selling here? Because we've now got almost 800,000 holders on the Ethereum chain. Now, Chainlink is available on several chains, on Solana, on the Binance Smart Chain, also on Ethereum. Most capital is on Ethereum, so that's what we are focusing on in this video. What you're seeing here is the number of retail investors versus whale investors over time. The way you make this distinction is by looking at how many Link tokens are held in a particular wallet. If that's 50 tokens, so roughly $1,000 worth of the token, then we count this towards the left chart. For the chart in the middle, it's 500 tokens, not just 50. And for the chart on the right, it's 5,000 tokens. So we go at 10x in minimum holding with each chart. We can see that really the accumulation of Chainlink has somewhat stopped. In the last 1.5 years, none of the wallet cohorts went up in number. Here on the right, that's at least $100,000 worth of Link. There's more than 6,000 such wallets. And so when the number of retail investors and whale investors is not going up recently, why do we see this recent rally? The buyback program hasn't bought that many Link that quickly, right? It's very unlikely that we're going straight up from here and back to the old all-time highs within a year. This is clearly a news-driven rally, but it's not the long-term holders that are buying. It's short-term speculative money. It's a capital that's going in with leverage that can also exit very quickly. And here is why I think that. Have a look at the trading volume in the last 24 hours. There was 167 million worth of trading volume on Binance. That's on the spot market. But compare this with the perpetual futures market. Here we had almost 1 billion worth of trading volume. So a multiple of what's happening on the spot market. Most people that use derivatives with leverage to bet on the Chainlink price tend to bet on rising prices. That's why the funding rate is positive. So the longs have to pay the shorts to get more price exposure. The trading volume on the perpetual futures is high. It's not super elevated, but it's definitely higher than usual. And with a price rally like this, we do see, of course, some shorts getting liquidated. But again, the vast majority of traders on the perpetual futures are betting on rising prices of Link. And that's the problem, because that means that every dollar that gets into the perpetual futures will get balanced out via arbitrage bots on the spot market. And so as open interest is rising, the price, the spot price itself, also inflates up. But open interest is extremely volatile. The short-term traders move from asset to asset rather quickly. What we actually want when we buy an asset is that long-term holders accumulate, because long-term holders tend to not sell that quickly. But currently, it's the short-term holders that bought Link. The open interest is extremely high. And just have a look at how much the Link price, the spot price, correlates with open interest. When there's a lot of bets on the price, the spot Link price tends to go up as well. When there's less bets, when open interest goes down, then open interest goes down as well. And this is what makes makes me not that bullish in the short term for Link. We are simply that high already in open interest, close to 1 billion worth of bets. And while the Link dominance does imply potentially more upside, and while Link relative to Ethereum is somewhat balanced, I don't like that recently the price got propped up with open interest with just short-term leverage. If Link is going to outperform even further, if maybe some spot buyers come in, or if maybe the treasury buys up more and more links, or maybe if open interest expands even further, and then we get to the higher end of the trading range, then I might consider even shorting some Link. I did this in the past and I did make quite a bit of money with that. Here, have a look at this. On January 23rd, I announced this in the premium membership of this channel. I am opening a Link BTC relative valuation short, and subsequently the price went down quite nicely. So those kind of relative valuation charts do help quite a bit to understand capital flows. A regular US dollar chart on a linear scale doesn't help us at all, but once we look at this compared to other cryptocurrencies, especially Bitcoin and Ethereum, we get a much cleaner picture. A clear shift in crypto has happened. Bitcoin is close to the all-time highs, yet the interest, the search interest, the retail interest is very low. Bitcoin gets supported because of Wall Street purchases, not because of purchases by retail. Nobody is searching for crypto or for Bitcoin anymore. The market is consolidating. The capital is concentrating towards a few winners. That's usual in any market, right? The vast majority of assets, the vast majority of players tends to go down, and there are a few winners. The winners take most. What we see over here is the performance of the smaller altcoins in the last year. And Bitcoin doubled in the last year, but most altcoins went down. And here's the thing, most people try to find the few assets that still do okay. They try to find the next Dragon coin or the next go-to. But how likely is it to get proper allocation to those assets and not pick any of those other red assets and burn all the capital? The odds are clearly against us. So this approach is clearly problematic. It's not easy at all. The approach of timing the macro environment is also not that easy. This is Bitcoin over time, right? And of course, it does make sense to buy Bitcoin after it has dropped 70 or 80%. That's the best time to get in. We are very far away from this, unfortunately. And the issue is also, nobody wants to buy when we are depressed, because there's always a convincing story why Bitcoin will go to zero, why crypto is doomed, while nobody will get into the market again. We are far away from this, but in general, right, riding the macro is also not the easiest. Trying to find the next 10 or 100x altcoin is a problem. Trying to buy Bitcoin when it's extremely depressed is also not that easy. But I do think there is an approach that's comparatively easy, where the odds are actually in our favor, not against us. That's by using the market structure to our advantage. This market structure here, right, that all of the altcoins go down all the time. Why do they actually go down? The answer is token inflation, right? It's new tokens that hit the market. It's the insiders, it's the venture capitalists, it's those paid influencers that get tokens, that maybe get them unlocked over time, that then simply just dump on retail. That's why all the retail investors lose over time. They simply get dumped on by the smart money. Why do venture capitalists like Andreessen Horowitz like crypto? Why do they invest in it? They do this because they get into the projects very early. They've got a very tight network. They've got a lot of capital to play with. They get in early and then they sell off and dump on retail. Or why are there so many compromised influencers that take money or tokens of a project to promote a certain cryptocurrency? This here, for example, is BitBoy Crypto, right? A dedicated review. He asked $35,000 for that. The reason is simply conflict of interest. It's profitable to do this. I, by the way, never took any money from any crypto project. I also will never take any money from any crypto project. I want to make my money in crypto in a different way. And that is through building skills that help us to distinguish the noise from the actual signal. And again, it's all about taking that market structure to our advantage. There is a way to make money with it. When a token like Balancer inflates in supply, when the supply is growing and growing because the users of the platform get tokens, because the early investors get token unlocks and they dump on retail, when something like this happens, then as a consequence, the token of course does worse compared to Bitcoin, Ethereum, and Solana. So this is now Balancer relative to Ethereum, and it just constantly is going down. But we can just flip this on its head. When we go long Ethereum and short something like Balancer, we see a chart that's not possible to achieve with any single bet on crypto, right? This is very little volatility and very constant growth. This is now a linear chart. Here's the same on a logarithmic chart. Balancer is not a cherry-picked example. The overall altcoin market works like this. This is the unlocks over time for all of the tracked tokens on this website here. So the website is tokenomist.ai. This is the weekly unlocks across all the tracked tokens, and it's above 600 million per week most of the weeks. So if there's not at least $600 million coming into the crypto space in a particular week, we see the altcoins do worse than Bitcoin, Ethereum, and Solana. This is how those kind of charts develop. This is why we see red everywhere. This is why the strategy works so well. Again, instead of trying to find the needle in the haystack, it's much better to bet on the overall structure. When most people cash out, when Andreessen Horowitz makes money by dumping on retail, why don't we just get ourselves on the same side? I'm following this strategy for almost 4 years now. What we see over here is in light gray the performance I would have gotten had I just dollar cost averaged into Bitcoin. But instead I did the relative valuation plays that I just described, and that's why I got the black line return. So this comes from an Excel sheet of my personal portfolio. This is monthly data, and it's got now 44, 45 data points roughly. I started this strategy with decentralized finance, so with borrowing and lending platforms like Aave or Venus Finance. But recently I do this with perpetual futures. So this started 2.5 months ago. I started with 40K and now it's at 60K almost. So that's almost 50% return in less than 3 months. I do not think that this will continue forever at that pace, but I do think in general this is a money-making strategy. The strategy has already worked for almost 4 years, and it also works with leverage on the perpetual futures. And so basically we just flip this thing around, right? Everything that's red over here becomes green. Everything that's green here becomes red. The odds are finally in our favor. We are not gambling on random meme coins, lose everything. Instead, we make money the same way how the insiders and the venture capitalists make money. We make money when the dumping happens. And so I understand the problem, right? If you followed other people like BitBoy Crypto and you trusted them and you've lost your money with them because you just followed whatever they said, and I do understand if somebody else comes along and says, follow my approach, that it makes sense to be somewhat skeptical. And so I was thinking about this. How can I prove that I'm very certain that this actually works? Here is the offer. Watch 2 tutorials in the premium membership. So this is one of them. It's half an hour in length, how to use perpetual futures on Hyperliquid to bet on relative valuations. And then there's the second video over here, which is at least equally as important. Risk management with relative valuation bets using Hyperliquid. If you don't know how to manage your risk, you've got a big problem with those instruments. But yeah, the offer is to just watch those 2 videos. Once you've done this, then I don't expect you to start trading by yourself already and find the best opportunity. This is only something for the people that have been around for a while. This is, by the way, a few trades that have been made by other members that are shared over here in the chats. I think it is much better to do a little bit of hand holding, as in I will share my favorite trade that you can enter with that strategy. So you know how to use the platform, you know how to set up the positions. I will share then what asset I believe has the most likelihood of performing in the near future. You will then enter the position, hold it for a month, and if you don't make any money, if you're actually in the red with that position, I will simply refund the premium membership for free to you. You don't have to pay anything for premium if you're not making money with that first trade that I'm sharing with you once you enter. Of course, besides that very first trade, I'm also sharing all the other trades that I opened. This, for example, was WorldCoin. WorldCoin has terrible tokenomics as well, and it underperformed Ethereum very consistently. But one thing after another, let's do the simple stuff first. Let's set everything up. Let's open the first trade, make that first profitable trade, make the first gains, turn ourselves around from being a constant loser to actually start winning. And then we can take it from there and become a bit more complex along the way. The premium membership is currently $125 per month. But again, I'll refund this in case you don't make money with that first trade. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!